I want to bring in Walser Wealth Management's president, Rebecca Walser. Rebecca, Republicans have said that the 2017, the tax cuts, that they're completely off the table. And this is a big sticky point because the Biden administration really seems determined to rip that whole thing apart. What would the impact be for the economy, for the stock market, if that was the case, if that was the way they all went?
Well, Charles, this is not the right time. So you can see what we're dealing with right now with stimulation and trying to get it exactly right. And we're not getting it exactly right. And I do agree with you. I think it's short term with the reopening and really getting back to business as normal, hopefully. So to inject large tax increases, this is just not the right time. We really need to get the economy stabilized. And I know this administration is itching to do it, but this is just not the right timing.
Your thoughts on what we're going through then in this market? You think this inflationary thing is transitory? And do you think the selling has really been an indictment of trust when it comes to the Federal Reserve being able to pull off what they want to pull off?
Yeah, it's exactly that, Charles. I do see a period of volatility happening right now, and we're going to have some people exactly struggling with what you were just talking about with Keith, and which is, are we going to sell out of this and stay the course, stay on the sidelines and dip back in when we get the dips, or are we going to just stay the course the whole time and to your other guest point, even buy into the correction? But I do see the end of the year positive, Charles. So I do think we're going to have some volatility, but I do see the end of the year turning around and being a positive year overall. But there's a good side. There's a good thing. There's a good thing about this, Charles. This proves that their theory of MMT is not relevant. It does not work. We have inflation and we have to deal with it.
Okay. Listen, that's everyone. There's a big case out there for it saying, hey, China did it. Japan did it. Why won't we do it? I do want to ask you, because your real specialty is taxes, and Monday's the new tax day, at least for this year. It stands to reason that most people after that are going to be paying a lot more taxes over the next 4 years. What measures should investors be considering to mitigate the damage? I've already spoken to my accountant. I've gone through a box of Kleenex. I'm done. But what can we do for the next 4 years?
Yeah. Well, one thing I'll speak to just a capital gain. So if we see that there's a coming capital gains increase, right, you can always sell out of your portfolio and buy right back, step up your basis to the fair market value if your basis is extremely low. If you've had a position, I have clients that inherited positions from their parents years and years ago. And, you got to step up that basis. If we're going to have a capital gains increase, we don't want to have that basis so low forever.
I love that. I love that. Although, you know what? When you inherit it and then you sell it, do you stand over their shoulder and make sure they buy it right back? Because a lot of them may sell it and look at that cash and say, "There's a Corvette I've been wanting for a long time." You may have to make people buy those.
That's right. Do it for him, Charles. Do it for him.
I'll try. Rebecca, thank you very much. Coming up, the